Well, hello there, ladies and gents. Great to see you again, and welcome back to Advance Your Wealth with Homer Smith. Ryan Ruff here, your host and moderator, but as always, I've got Homer standing by. He'll be joining me in just a moment. We want to frame up today's conversation. Of course, we're diving back into another wealth management discussion today. Look, hey, we're sitting down recording this towards the end of the first quarter here in the year 2025, and many financial advisors and their wealthy clients are beginning to think ahead and examine some of the big tax law changes that we are told are on the horizon. So Homer and I thought it'd be a good idea today to sit down and discuss what those potential changes could look like, and of course, how they would impact you and your family's wealth, but also what you might want to consider doing to position yourself accordingly. So before we dive into the details, let's go ahead and say hi to the man of the hour. Homer, good to see you today. How you doing?
Hey, Ryan, good to see you as always. I think a very, very important topic that pretty much all of our clients are interested in and trying to understand more as they kind of look towards potential tax changes this year. And so, yeah, excited to dive into this one.
Yeah, so let's start high level here, Homer. January 1st, 2026. That's the big date here, in question. And that is, we're going to potentially see some very big changes coming to the laws and rules governing estate taxes as well as the gifting of, the taxes surrounding gifting. But those changes, they aren't necessarily certain as of now, correct? Talk to me about where we sit here.
Yeah, not at the moment. No, I mean, obviously, I think with everybody, seeing Trump and the new administration coming in, there were a lot of expectations on the tax changes or continuation of tax benefits that they wanted to do. But as of now, the Tax Cuts and Jobs Act of 2017, which went into effect for 2018 on at least the estate tax exemption change, all of those are set to expire at the end of 2025. So 12/31/2025. So then as of the beginning of 2026, we have some major changes coming. And while I think many people expect a lot of the current tax changes that were made 6-7 years ago to stay in effect, there's still a lot of uncertainty about what that's going to look like.
Sure. And despite that uncertainty, though, Homer, we're looking at these big changes that could or could not really go into effect. Is there anything people can be doing to kind of plan accordingly despite that level of uncertainty?
Absolutely. I think for the clients that we work with, what we were basically recommending and helping them think through is we need to plan as if these changes aren't going to happen, meaning that the current higher exemption amounts aren't going to continue or maybe even be better. We have to plan for that if they expire. Because if we just make the assumption that these changes are going to take effect and then they don't happen for whatever reason, it's potentially millions of dollars that are going to be left on the table from an estate tax standpoint by not doing that planning. So we're lining up, doing all of the planning that just in case this doesn't happen, and lining up the right attorneys, because if this doesn't happen, if this extension isn't made, and that starts to become more and more clear near the end of the year, there's going to be a rush on attorneys. And so we're trying to just line up everything now, have all the planning ready to go for whichever outcome comes up.
I love it. Homer, let's get a little granular now for our folks out there. Take me through some of the major changes or developments that may occur and what folks should really be paying attention to in the here and now.
Great. Yeah. So back in 2017 with the Tax Cuts and Jobs Act, when it was passed, what they effectively did is they took the lifetime and gift exemption for gifting, again, while you're alive or when you were to pass away. They effectively doubled that exemption amount. And so it went from about 5.6 million for single filers to 11.2 million for single filers, and then 11.2 million to 22.4 million for married couples. And no change to the actual rate. So the estate tax rate was still 40%, but now it was off of this much higher exemption amount. So it took a lot of families who were potentially in a position to pay estate taxes and now remove them from having to worry about, at least from a federal level. Obviously, states are very different, and none of them exactly followed, or at least most of the states with estate taxes didn't just follow the federal exemption. So this is just at the federal level. And now as we move forward, as we've gotten inflation adjustments to those for 2025, that exemption amount is almost at 14 million. It's like 13.99 million for an individual. And so almost 28 million for a married couple in terms of exemptions from paying estate taxes, which again just limits the amount of families that are subject to that. However, at the end of this year, if nothing happens, if these changes aren't made under the new administration, that exemption amount is going to get cut back in half. And so the current exemption is going to fall back to about 7 million for individuals and 14 million for married couples. So all of a sudden, we're going to have families that, again, if they, let's just say they were right at the $28 million mark from a net worth standpoint, they're going to go from having no estate tax liability to all of a sudden having about 7 million of estate tax liability overnight. So massive, massive changes. So again, a lot of uncertainty around whether anything is going to get done. But those are the magnitude of the changes that are potentially coming here.
All right. Well, then, given those particular changes, then Homer, what are some actionable steps that you and your team are talking about with folks, that they can move forward on?
Yeah, I think the most important consideration to help reduce that is now planning to accelerate the gifting. And so, because they weren't really in an estate tax situation because of the higher exemptions, if that starts to become more likely or look like it's more likely, they're going to have to really start to look at and focus on which assets can we and should we be gifting out of our estate that again they maybe weren't planning to or feeling that they needed to do that. So that's the biggest one. The biggest challenge is that a couple of things. One, estate planning is relatively permanent once you do it, and sometimes doing that accelerated gifting, you're choosing between two tax rates. You're choosing between avoiding an estate tax, which is a 40% tax that is certain when you pass away, but you might be basically forcing your family to be subject to capital gains tax in the future for those gifts. Because when you gift while you're alive out of your estate, the people who receive that gift or the trust that receives that gift inherits the basis. So if you were to gift a really highly appreciated asset, while you are avoiding that 40% estate tax, you're now going to be giving that whoever inherits it the built-in capital gains. Now, when we do planning for clients, at the end of the day, we want to optimize for the ultimate outcome, and gifting higher appreciated assets might make some level of sense, but also we want to focus on control. And when you pass an appreciated asset, they're not forced to sell it when they inherit it, and so they can still defer that gain, but you can't defer estate taxes. At least in most cases you can't. So we're choosing some level of certainty by avoiding the estate tax, but basically subjecting ourselves to capital gains tax. So again, it's important to do the planning, look at all of the assets, figure out what's the most optimal way. But in general, it's now how do we get the right assets and the amount of assets that make sense out of the estate to avoid that tax.
Sure. I like it a lot. Homer, before we move a little deeper into the conversation, though, we're talking about gifting. I feel like I'd be remiss if I didn't bring up trusts. We've had conversations on the show surrounding trusts. Is there any play in this moment here for trusts of some kind to be useful?
Yeah, there's a lot of different types of trusts. I would say one of the trust structures, particularly for married couples, that has become very popular and has a lot of benefits to it, is something called a spousal lifetime access trust, or a SLAT, is what it's typically referred to in this environment. And one of the benefits of these trusts is that a spouse can take their portion of their estate. It has to be considered separate property, so we won't get into the weeds of that. But in community property states, there's some work you have to do to get this strategy to work. But you're effectively gifting your personal assets to your spouse in trust. So you're gifting it to a trust where your spouse can be the beneficiary, and then your spouse can do the same thing with their assets. They can gift their separate property into a trust for your benefit as a beneficiary of the trust. There's lots of rules on how you can get the assets out. There's certain design that you put in to basically make sure that these pass muster with the IRS, but they are pretty complex, and there are some risks with them in terms of if you get in a divorce and you've already gifted this money to your spouse, and again, there's things you can do around that as well. But also, if your spouse dies suddenly, you who gifted this money away to them can't suddenly become a beneficiary of that again. It goes to your kids or whoever the other beneficiaries might be. So there's lots of moving pieces with this. But the good news is there are structures out there that allow you to gift assets out of your estate while maintaining still a lot of control, particularly for married couples. So the good news is there's really good answers. Again, everybody's situation is different. You need to look at your individual situation. But again, the good news is there are great strategies out there.
All right, appreciate you shedding some light there on trust for us, Homer. We're talking a lot about just action steps that somebody could be doing, but what if you're on the flip side and you're not really feeling like making an actual decision right now would be fruitful, or taking action in this moment feels right at this given time? What would you say to those folks, or better yet, maybe even people are feeling almost stuck because of that level of uncertainty with the consideration to the estate tax changes?
Yeah, I think the most important thing for families that are at that level of wealth where they could be impacted by this is you just got to know your options. And the best way to really understand your options is to do and engage in what we call scenario planning and stress testing. There's a lot of potential outcomes with these changes. The current exemptions could get extended. They can be just nothing happens and they go and get cut in half like we discussed, or they can decide to do something completely different with that. And until you actually run the numbers and look at what would be the outcomes from each of those scenarios, and also looking at the long term of the economy and your family, and running different scenarios around that, and if our business or our assets grow at a higher rate than we expect, or what if they grow at a lower rate than we expect, and just running all the numbers, really understanding the advantages and disadvantages of each of these different strategies, and under each of these different scenarios and stress tests, it's really the best way. And so by having the right team to guide you through that so that you can actually get to a point of making a decision, and even if that decision is we aren't going to do anything, that was a good decision if you considered all the options. But doing nothing because you just don't know what the options are, that's not a great plan. And so definitely engage in this idea of scenario planning, stress testing, and just make sure you understand all the options available to you.
Sure, Homer. I want to touch on something you just mentioned, and that was the longer term. For anybody out there that what would you say is a really important consideration for families to keep in mind for not just this year? We're talking about January 1st, 2026. What about the years to come?
Yeah, I'd say first, don't overreact. These are some very large potential changes that could occur, especially if this sunset comes and the exemptions get cut in half and subjects a lot of people to significantly more estate taxes. But nothing that will happen in this next round of tax changes is going to be permanent. Sometimes they even use labels like permanent changes to tax code, but all that means is it's permanent until the next Congress changes it. And so the likely too is, even if this does get extended, just the way that the budgeting process works, it's not likely to be extended for a significant amount of time. It may only be maybe a 4 or 5 year extension on the current plan. So if that were to happen, that still means that in another 4 or 5 years, all of this is going to happen again. The sunset is going to be coming up, and everybody's going to have to go through the same process of determining whether to gift or not, or is the next administration going to come in and extend that or make changes. And so again, it's important to understand your options, but no need to overreact. So even if, again, your choice at this time is to not do planning, that's okay, because likely in 4 or 5 years we're going to be having this discussion all over again. So yeah, just no overreacting, and just let's look at all of the different options, and that may change, and your family might change, and your wealth might change in the next 4 or 5 years. That might dictate a different decision at that point.
Sure, sure. Well, appreciate that, Homer. We've covered a handful of different decisions that can be made in the here and now. Obviously, you mentioned the stress test for those that are still kind of grappling with that level of uncertainty at the moment. But any final thoughts or advice as we wrap up today's conversation?
Yeah, I think the from a high level, and I'll just kind of speak to Convergent and our firm. What we're known for, more than anything else, is helping families navigate life's most important, meaningful, and complex transitions. And while planning for estate planning in particular is not ever a certainty, because no one really knows when they're ultimately going to die, this is where we really do our best work for clients and helping them think through these decisions, and having a trusted advisor sitting by you that knows how to do the scenario planning and the stress testing, and to bring you the right ideas that fit your particular family situation to help you make a smart decision for what's best for you. That's really what we would recommend. And so at the end of the day, there's a lot of potential changes, not even just in the estate tax code, but along with this Tax Cuts and Jobs Acts, there's potential significant changes to income taxes as well. If those sunset, we're going to see significantly higher income taxes, particularly with flow through businesses, which is most businesses out there. So there's a lot more to talk about than just the estate tax part when it comes to these potential tax law changes. So again, it's what's most important: have a good team around you, do a stress test, run some scenario planning. That's going to be your best shot with all of this.
And Homer, for anybody that's looking to maybe go through that stress testing process and let's say have a conversation with you and your team about building that team around them, what is the best way somebody can get in touch with you guys?
Yeah, definitely reach out, send me an email, go to our website, and schedule a discovery meeting. Our process, so the way that we work with our families is we'll always start with a really deep discovery, understand your situation deeply, run a very detailed analysis, basically that stress test scenario plan for you before we ever engage, because we want to know, can we actually bring value to your overall situation? And we'll identify where are all the gaps that really need to be addressed. Where are all the opportunities that you're not taking advantage of that you should be considering? And then what are all the key strategies that are available to you that could make a significant impact on your estate taxes or potentially your income taxes? And then, if we're the right team to help you implement those and bring those together, great. We'll have a proposal for that. But our clients get a lot of value just running through that stress testing process before they ever even make the decision to hire us. I'd highly recommend anybody who is interested, definitely reach out to us. We'd be happy to run through that process with you.
Perfect. Well, of course, folks, we had Homer's email there on the bottom of the screen. Homer, appreciate you taking some time out of your busy schedule to join us today, and looking forward to seeing you back here on the next one.
Thanks, Ryan.
Of course. And hey, folks, we're going to take a final moment as we typically do on this show and thank you for making us a part of your day. If you enjoyed today's discussion, if you learned a thing or two, make sure you hit that subscribe button then on whichever platform you checked us out on today so that you don't miss out on any future conversations where Homer and I sit down and dive into different wealth management topics like we did today, discussing the estate tax changes that are likely coming here at January 1st, 2026. But look, for Homer, I'm Ryan. We're going to go ahead and say so long now. But we appreciate everybody stopping by and being with us today on Advance Your Wealth.